We are back with you here on the Market Day Report on a Thursday. Thanks so much for joining us. I'm Marlon Bowling with you. We're going to take a look at your grain markets first in this segment here. And we've had quite a bit to factor in the markets today. We have had export sales reports on a weekly basis. We had sales on an overnight basis. We have weather approaching the southeastern U.S. There's a lot tugging on the markets today, and we have a new calendar month, so people establishing new positions. Let's take a look at the markets with extra help from an analyst right there at the trading floor in Chicago. It is OliverSloup of iiTrader. Oliver, welcome to the program. Thanks for joining us today.
Thank you for having me.
So are you glad it's September?
It's football season. I couldn't be happier. Go Big Red.
That's right. You are definitely a Husker fan growing up in that Lincoln area there. So we'll see how they do this year. Now, as we look at this grain trade, interesting market with the corn. Speaking of corn huskers, you have the corn showing signs of strength today all day long. How come?
Well, I think there's a couple different catalysts, as you had mentioned. It's a new month, so I think you're seeing some position squaring ahead of a three-day weekend as well. Because of Labor Day, I think you're seeing maybe some buying back in to cover some short positions. And really, we've just been in a very depressed market over the past week or so. So I think we were a little bit oversold. We have a three-day weekend ahead of us, and I think those things in conjunction with a little bit weaker dollar today is definitely helping boost the grain prices, corn being a big beneficiary of that. I wouldn't be surprised to see us consolidate throughout the rest of today's session, into tomorrow, and maybe even into next week. If we're able to get out above the 322 on a closing basis, which was previous support, I think we could consolidate towards the 332 and a 3/4 level. That's the 20-day moving average, but that's going to be a very pivotal level if we make it back up there. I think we could start to be a little bit more range bound if we fail to get out above that.
Well, we did have an overnight sale reported by USDA of corn to Mexico for the current marketing year, or most of it was for the current marketing year. Total was 129,540 tons, so that was helpful to get the corn off to a good start. On the soybean trade, you know, we had an overnight sale of soybeans as well, and that didn't seem to really help the market a whole lot. Right now, you have November soybeans down 1/2 cent at 942.5. Now, it's kind of stuck in the middle of the trading range today. Just to look at it on the surface, you would think it wasn't doing anything, but we've had fairly choppy action in the beans, going a nickel higher and lower.
Yeah, we have had a decent range, about a 10-cent range, which I guess is fairly decent considering the circumstances. A little bit lighter volume. Again, three-day weekend. Some traders kind of taking off a little bit early, hanging right around those August 3rd lows, I believe it was, 943. I think the chart setup is still pretty bearish and a failure to break out above resistance levels. But in the intermediate term, I wouldn't be surprised to see some consolidation higher, some position squaring into the three-day weekend, maybe consolidate back towards 966.25. That was the 200-day moving average. But ultimately, I think we fail out there over the next week or so and consolidate a little bit lower until the market kind of finds its new equilibrium. Now, I want to touch briefly on the wheat market, too.
Yeah.
The wheat market has been, the chart is a technical graveyard, but I do think there's pretty good value here. If we are able to get back out above $4, we're deeply oversold. We haven't been this oversold since July. Last time we were at these oversold levels, we managed to put in a near-term bottom and rally about 35 cents. I'm not saying that is necessarily going to happen, but I think there's a good possibility that the funds start to cover some shorts here in the intermediate term. I don't think they're going to be adding significantly at these low prices.
Very good point. Minneapolis wheat right now in December is 3 1/4 higher. Kansas City is kind of leading the charge today. It was showing gains a little bit ago of about 6 cents on December. We're up 6 now at 403.5. Chicago not quite that strong. We have December Chicago wheat up 4 1/4 at 392.5. And checking on the cotton real quickly, a big surge in cotton today on account of the weather. Now December up 243. At 68.01, a tremendous move. We'll be back with more with Oliver right after this. Well, we're back with you on the Market Day Report. I'm Marlon Bowling, and at the other end of the line here, we have OliverSloup in Chicago, right there at the trading floor. And he is speaking with us live and direct there from the CME Group. Oliver, before we get into the livestock trade, I did hear a mention this morning, and I wondered if you could touch on that, that the CME Group did lower their actual margin requirements for corn. Is that right? Do you hear that too?
Yes, they did, and I think that's fairly typical this time of year. Is I think the volatility kind of shrivels out of the market. So yes, that is the rumor around the street. I haven't seen it in writing, but that's what I've heard as well.
And that could possibly bring in a little extra investment money, and that might be a small contributing factor to why we're seeing a little boost in the cotton or in the corn futures today. So just wanted to mention.
I wouldn't imagine hurting it. So
yeah, exactly. All right, now we want to focus on the livestock trade, and this cattle market has really gone in the tank earlier today. Now, it tried to recover a bit there about an hour ago, but it seems like now we're getting closer and closer to these limit down moves. October live cattle now down 283, Oliver, at 103.75, and December down 270 on the day at 105.68, and it actually looks like maybe we did touch limit down at one point. February down 240 at 106.15. Let's take a look at the feeder cattle and see how they're doing. They're still showing very sharp losses, but they're not as close to limit down as what the live cattle market is. We have September feeders down 275 at 137.78. October down 333 at 135.02. November down 332 right now. So what's your summarization of what's taking place here in this cattle market here? Because some folks thought maybe we put a low in on Tuesday, but now we have new lows today, right?
Yeah, we had a great start to the week, saw some buyers step in. I don't necessarily know that it was real buying stepping in. I think a lot of it was probably more shorts covering, and obviously over the past couple sessions, we've seen those shorts step back into the market, and we've seen that today with the October contract touching limit down. It'll be very important to see how we close today. I think if we close limit down, I think that's probably going to carry over a little bit more pressure to round out the week. But if we're managed to stabilize here towards the later end of the session, I think that kind of is a silver lining here. But ultimately, this has been a very heavy market really over the past. I was looking at it, I think we're coming up on the 2-year anniversary from the highs. So it has been very depressed recently, and it's just been lower highs and lower lows continuously. And I believe we've only had a handful of up days in the past month. So at some point, I think there will be a little bit of value coming into the market. We're watching feeder cattle for that more closely on the October contract, 132.27. That was the recent lows. I think if we're able to hold that, there's pretty good value to the upside. We'll be looking for the retest of the top end of the range towards that 141. But I want to see a little bit more promise and stabilization here in the near term to round out the week.
Wow, interesting stuff. Thanks for pointing that out and providing those chart points to keep an eye on for our viewers and listeners. Appreciate that very much. And if I don't talk to you before then, I hope you have a good holiday weekend, and best of luck to your Huskers for you.
Thank you very much.
OliverSloup of iiTrader in Chicago. Now, I want to take a look at this lean hog trade before I wrap things up on this segment here. And the lean hogs kind of ignoring the cattle today. Cattle showing sharp losses here, and the lean hog market now going the other direction. Not that strong, but it is to the plus side, that's for sure. October lean hogs now 55 higher at 63.40. Currently, we have December now 58 higher at 58.10 per hundredweight, and you have your February now 53 higher, and it's trading at 61.85. So, Janet, good solid gains of over $0.50 on the first 3 months in the lean hog trade. The cattle just trying to hang in there and survive.
All right. Well, thank you very much for the insight, Marlon. Of course, he'll have more in the Roll Evening News tonight.